Hi, Rafi. I'm Umair. I'm a host on Better Tech. Better Tech uh, is a is essentially our kind of work towards creating the technological democratization by talking to founders and tech guys like yourself, and finding what kind of interesting work they're doing, what their thoughts about some of the things that are going on in the world, and let these get to the audience all across globe. So welcome on this episode of our Better Tech podcast. So why don't you take the lead and introduce our audience about yourself, as well as some of the work that you are doing, and we'll take our conversation from there.
Sounds good. Thank you very much, Omer, for having me today. My name is Raafi Hossain. I'm the co-founder of Facet, a digital asset gateway focused on emerging markets. And what we do is we try to leverage digital assets, Web3, crypto, blockchain, to enable more and more people to enter this space and benefit from its upside and all the benefits that come with this technology.
Okay, so let's talk more about your current company. I mean, how you started it, where it is at this point in time, and a little bit in more detail, what do you really do, and then we'll move on to some of the talk around the space and what is happening right now in that space.
Yeah, sounds good. So look, we started this company because we saw an opportunity to really connect people across borders. So we're based in Dubai. Dubai, as you know, Omer, is it's 90-95% people from different parts of the world who come and settle here for an extended period of time. A lot of them come from places like Pakistan, and they continuously interact with their family and friends across borders, not just in Pakistan but other countries as well. So when we think about digital assets, Web3, what this really allows people to do is interact, transact, own assets across borders, right? And it's a very powerful way of people doing things from remittance to saving to taking their identity with them across borders. And that's really what the inspiration is, especially for emerging markets where this sort of infrastructure, this sort of opportunity to be an asset owner is very powerful and can make a significant difference from a socioeconomic standpoint.
So talk to us more about what is really, I mean, a digital asset. We'll talk about the financial inclusion and how it can change the emerging markets. And also, I think there are regulatory issues when it comes to emerging markets as well. We'll come to that, but help us understand what is really a digital asset and why it's worth anything.
Absolutely. So look, I mean, digital assets come in various forms, sizes, and shapes. Of course, we've all heard about the NFT craze, but NFTs, for example, are digital assets that enable people to own something that is unique. It could be a number of things. We often hear about digital art being an NFT, but NFTs can, even be the ownership of real estate, for example. So, what digital assets do is that it's a portable way of owning something of value that is ascribed directly to yourself as the owner without a third-party intermediary. Now, that may sound not so revolutionary, but it really is because now, you can, have provenance over something that you own that is trustless and permissionless and that solely belongs to yourself. So, if you think about, a small and medium business owner or someone who is a producer of IP or content, being able to solely own that content, transfer it, sell it, buy it, all in a trustless, permissionless environment, especially in emerging markets and especially across borders, is something pretty incredible, right? So I think that is the intrinsic value of digital assets. Value beyond that is generated by what kind of utility is that digital asset bringing the average person, right? Now, of course, not every digital asset has these intentions, but as we move forward and this space matures further, I think that's what we'll see more and more.
So, I mean, I've seen this craze, and I've seen NFT taking its roots in the digital art, and then even now land sales are pretty
Yeah.
turning out to be pretty common in the Web3 world. But essentially, in the real world, uh, people value asset because it has certain constraints on supply, and also they have a possession of something, and they can trade it for someone else. Now, if you translate it into a Web3 world, one of the problems that I've seen with digital assets, even with NFT and its artwork, that it was not short in supply. I mean, there could be replicas and replicas and replicas of Mona Lisa, but there's originally one, so that has a lot of value. But I've seen in the digital world that people create, hey, this is maybe Godzilla, this is it. But we have 500 posters of that. They are NFT based, but I mean, at the end of the day, there's not scarcity element to that. And it's like you're printing your own dollars. A lot of companies are doing it. So tell us, I mean, what will it take? And that eventually, I've seen LFT after initial boom is not going. It's not. I feel it's not managing to hold on to that hype, as well as talk to us more about, and there's not enough now demand out there for NFT. So talk to us more about that. How will eventually people start valuing it? What will it take for this to get mainstream, and how you see its future?
Yeah, absolutely. Look, I mean, NFT at the end of the day is a technology, right? It's a non-fungible token that can represent something unique. So today, when we think about NFT, or the word NFT is used, it's primarily for digital artwork. But in the future, you know, it could be IP rights, it could be data, it could be many, many different things that, you know, even today, perhaps we're unconsciously owning and selling, sometimes for free, to places like Facebook and Google, for example. In the future, you know, your data, your uses in Web3 and Web2 can be tokenized via NFT. Your identity can, and you know, there's some value to that you have at your you know, at your purview to disseminate, transfer, and sell. So I mean, that's NFT as a whole. But coming back to your question of, you know, thinking about NFT in today's contemporary context, where we are today, where we are right now, when it comes to digital art, I think, you know, the best way to look at it, you know, I'm from Los Angeles, so I'll use a basketball reference. You know, so, you know, Michael Jordan, for example, he may have played in, you know, 50, 60 very important games where he wore a uniform, right? With the jersey number of 23 or 45, right? Now, these 60 important games that he's played, it could have been a playoff game, it could have been a game where he scored 60 points. That jersey that he was wearing has value to certain people, right? Now, if I buy that jersey for $2 million for a game that Michael Jordan played in 1994, and I, you know, showcase that on my wall at my house, there's value. Now, could you buy that same jersey, a knockoff, on the streets of New York or, you know, even Bangladesh? You can, right? But it wouldn't have been authenticated. And while it would look good on you at the end of the day, it wouldn't have the same value as that jersey that was authenticated that Michael Jordan himself wore for that very important game. Now, there could be a million of those jerseys, but there's only one for that game that he played. And I have that certificate that shows that, hey, here's Michael Jordan. This was his jersey. Here's his signature. It's on my wall, right? And not everyone values that, but just enough people value that. Those who love Michael Jordan, those who love basketball, those who love that moment, where the value is enough to justify for 2 million, right? And NFTs is similar. So today we may not understand the value of a Bored Ape, okay, but to some people that's extremely valuable, and I think that's the
But
best
Rafi,
way to look at it.
what I've seen in journal, sorry about cutting you off, but what I've seen in journal, that you have put it absolutely right, that that original jersey is one, and that is why it has a value of, let's say, $2 million or $5 million. What I've seen in the digital asset world, that Michael Jordan will just create 50 or 100 NFTs of that same jersey photo instead of one, which just eliminates that kind of
No,
scarcity element.
yeah, that's correct. But what I would say is that's why I mentioned that Michael Jordan would have played in, he would have played in over 1,000 games. So technically has 1,000 jerseys. But not every game is equal in value, but there are 1,000, right? So in that perspective, if there's 1,000,000 NFTs, I understand. But if there's, 100 Bored Apes and people like Bored Apes, they want to showcase that as their avatar. There is a value. So the main thing is that this is not too distinct from current human behavior. Now, the other point I wanted to make to you is that, today, when we think about social media, Instagram, and our digital representations of ourselves, more people are likely to see your Instagram page than your wall in your house. So, for example, I may have my Michael Jordan, jersey framed in my house, and I feel proud about it because I bought it for $2 million. But the reality is more people look at my Facebook or my Instagram. So now if I take a picture of my wall to show that Michael Jordan jersey and I put that on my Instagram, I actually derive more utility and value from my Instagram than my wall. Meaning that if I had an NFT to showcase that I actually own this Michael Jordan jersey and an NFT is showcased on my Instagram page, there's a direct utility there, right? So, this is the direction we're moving. We're still early days, but human behavior is going to be set alongst this trend, in my opinion.
I totally understand it. And I feel that eventually it's like the early days and eventually everyone will understand the value of the digital asset. So how you seen the market really now responding? Digital assets, NFTs, surely the one. What are the other areas where you've seen this all Web3 is emerging and in terms of digital asset and other areas and it's gaining popularity?
Yeah, I definitely think remittance. So if you think about freelancers, Pakistan, of course, one of the top freelancer destinations in the world. I would even say one of the top Web3 freelance destinations in the world. Now, receiving payment, extremely difficult, right, in these countries. Now, when we think about, firms like Coinbase, Binance, trying to leverage engineering and development talent in countries like Pakistan, Bangladesh, etc., the ability to do remittance smoothly, frictionlessly is extremely powerful. And whether or not, the government is regulating that or not, it's frictionless and its ease is so strong that it's already happening today. So I think these are direct use cases where we see the value of digital assets, because without a banking intermediary, two different parties from around the world can directly transact in exchange of a service with some sort of value being transferred to the service creator.
But when we talk about emerging economies, they're emerging and they're not really at the forefront of technology most of the time. So let's assume I did some work from you out of an emerging economy, and you paid me in crypto or whatever, or through a digital asset. I will not have means or probably regulators or probably enough companies to convert them into a fiat or something which is right now usable into a real world. So how you're dealing with that?
Yeah, to be honest, because of the
and we also understand now with this crypto bust that not everyone who's claiming that it's a stable coin and it's backed by a dollar, it's really backed by a dollar coin. So what are your opinion on that?
Yeah, look, there's a lot of projects out there, and obviously there's a lot of different negative opinions. There's positive opinions. There's positive use cases. There's negative use cases. It's really no different than banking itself, right? So when you think about Lehman Brothers versus Luna, it's similar human greed that led to both at the end of the day, and the lack of regulatory oversight. So it's no different. And Lehman Brothers wasn't too long ago. You know what I mean? So the reality is that
the financial recession of 2008, every other financial institution was crippling anyway. Yeah,
that's right. And unfortunately, this is less to do with the technology, more to do with what unbridled and unregulated human behavior can lead to. That's what I would say. The tech is the tech at the end of the day. But what I would say to your question is, in emerging markets, you'd be surprised. If you look at the top 3 destinations for Web3 and specifically crypto, you're looking at India, Vietnam, and Pakistan. right? Now, this is not America, UK. So I'll tell you, United States and Europe, Canada, their primary use of crypto is as a tool for investment, not for anything else. Whereas if you look at Indonesia, Pakistan, Bangladesh, Nigeria, their primary use case for crypto is multifaceted, right? Which is where we get our name from, by the way, because they're looking at it as a tool of remittance, a tool of store of value, a tool against hedge of inflation. So for right now, yes, Luna's USD might have gone bust, but I'll tell you, there's tens, if not hundreds of millions of dollars of transactions that are happening on USDC and USDT in Pakistan right now, because that's the only way some of these developers can receive payments. And they rather receive payments at this time, whether for good or for bad, in US dollar denominated stable coins versus the rupee, right? So because sometimes what happens is, I'll tell you, and I've spoken to many Pakistani developers, sometimes they need to outsource some work from Pakistan to another place in the world. Now, because of the capital controls in Pakistan, they can't always do that easily, right? So on one hand, they're kind of stuck. They can only receive money. They cannot send it out. So they turn to crypto. And the reality is that there's a very healthy, but kind of under the rug market right now, where you can go from a US dollar stablecoin to rupee, fiat to crypto, crypto to fiat. And, Binance is doing that right now pretty openly and brazenly. And there's no one stopping that, right? So this is the reality. And I think what I would suggest is that we don't want a Lehman Brothers, or we don't want a Luna in an economy like Pakistan, let's say, where at some point Web3 is inevitable. There should be some regulation. It will primarily serve to benefit and bring out the best of Web3 in these markets.
So I think that's a good analysis. So Raafi, you raised money right before. When did you raise money? Where your company right now at this point in time? And what are the plans?
We raised money in March. Yeah, we raised money in March, April. Obviously, it was a great time. Half of this this process of building a startup is timing. It's less about what you do, and it's about getting lucky with timing. So we were very fortunate. But our approach is, how can we develop real world
and
use
you raise
cases
your money
with
through
assets?
traditional VCs, crypto, IDOs, or what?
Traditional VC.
Okay.
Yeah, we raise fiat, but our point is, I think our premise is that real world use cases, real world benefits, real world utility to our user is what's most important, and it's very doable with Web3. I think that's the direction of this entire industry is right now.
You are a digital asset company.
Yeah.
So how you're different from OpenSea or others in the same domain?
We're similar, right? I mean, we're an exchange at the end of the day. But I think what we try to focus on is more about the bridge between, real world and digital world. That's really our focus. So our thesis is that both worlds will exist. Each world is complementary to each other. How can we make that bridge easy to understand? How can we make people educated about it? And how can we bring real world use cases to benefit for them? And
what's your product roadmap for this year and the next?
Look, I mean, it's really market by market specific, but we're very excited. We have a recent partnership with Mastercard in Indonesia, where our users can open virtual debit and credit cards that are backed by crypto, that can be accepted anywhere Mastercard is accepted. This will lead to lots of different types of productization for us when it comes to specifically Sharia compliant financing that is kind of collateralized by a user digital asset holding. So our focus is, the last mile non-crypto adopter. How can they benefit from Web3, and how can they interact with their friends and family in other countries, right? So that's primarily where our product roadmap is looking at.
Okay, and right now you have launched in how many markets?
So we're in different stages across the GCC, across Southeast Asia. We're licensed in Europe, in Malaysia, Indonesia, and onboarding users in some of these markets. Okay.
All right. And great. So the product is under development, and you are gaining traction, and so on and so forth. And so you see, are you looking for next round anytime by the end of the year, or you are all set for? I mean, because there's an investment winter as well, right? Right now.
Yeah, no, we're just putting our head down and building. That's our focus right now. Just build something that users can appreciate and love.
Okay. Okay, wonderful, Rafi. It's great talking to you, understanding about your startup as well as your overall views on the Web3. One last question before we stop this. When do you think this crypto winter is going to end?
I mean, if I knew that, I probably wouldn't be
A
here.
multi-billion dollar question.
Yeah, I probably wouldn't be here, but I think at this point in time, everything's tied to the macroeconomic environment of the world. So hopefully, when things get better for everybody, crypto will look better as well. But I think, just as an ending to this, I think ultimately crypto in winter will end when there's real world benefits that crypto is bringing to real people. And I think that's we're just one company kind of working on that amongst many to kind of
I'm
make
sure.
that change and
I'm sure.
behavior happen.
I'm sure I can relate it to .com era when everyone was building sites and there was a .com bust happened, but then there were few like
Very
Amazons
true.
and Googles and Facebooks of the world that emerged out of it, and eventually the whole .com era went into some. So I can totally understand that. Right now it's very early days. Some will bust,
Yeah,
some will float, and once the ones who will provide real value will eventually create the next set of economy. So
100%.
wonderful, really wonderful talking to you, Rafi, and glad that we kept it short and sweet. And I hope everyone who listened to us will get something out of it.
Sounds good, Umair. Thank you for having me, and thank you to your team for organizing it. Really appreciate it, and looking forward to hearing more of these podcasts as well.
Thank you.